What if I told you you don't need any income to buy an investment property? Curious, huh? You too could become an investor following these 3 easy steps that I'm about to show you. Let's roll. Hi there. I'm Gurfinkel, Senior Loan Officer of dang near 30 years and over 2,000 families served. And I am here today to break down the complexities of the mortgage realm and give you absolutely blunt advice. Now, many people think that they need to have a hell of a lot of income to buy their first investment property. I'm here to tell you that nothing, absolutely nothing, could be further from the truth. You don't need any income at all to be able to buy an investment property with this amazing loan program. Now, yes, you do potentially, most of the time, have to own your own place in order to buy the investment real estate using this program. But you don't need to rely on your own income. All you have to rely on is the cash flow from the property. So, how do you go about it? And how can you get there and start building your real estate portfolio? Well, the steps are super simple. Step number 1, you need to research your rental market. And the rental market really breaks down into 3 components. You've got your long-term rents or leases, basically somebody renting the potential investment property, your rental place, for anywhere from 12 months or longer. That is your garden variety long-term rental. Get familiar with what the rents on single-family condos and townhouses, or maybe duplexes and triplexes in your area are, because the rents can vary in the same town from one end of town to another, one neighborhood to another, greatly. So don't make the mistake of taking the average rents, research the neighborhoods, research the demand, and research what, again, the actual single-family, condo, townhome, etc. rents are. Those do not necessarily crisscross each other. You can't compare a rent on an apartment with rent on a home. Just like you can't compare a rent on a manufactured home, for example, with a rent on a condo. We're talking alligators and snakes and not apples to apples. So you want the same comparison. The next one, number 2, is medium-term rents. Those are not leases, but those are not also your overnight short-term Airbnb or VRBO type of rents. What I'm talking about here is actually something that doesn't get addressed enough, and that's a few months, from a few weeks to a few months rents. One prime example of those being traveling nurses. When there's a shortage of nurses in a specific area, the companies bring in nurses from other parts of the country, and they pay them a housing subsidy. They basically cover their housing. And those nurses typically prefer to either room together or rent something that is a little more private and a little more comfortable than a hotel or a long-term type of residency like, I don't know, Homebridge Suites with a mini kitchen. I mean, what's better? A hotel with a mini bar, mini kitchen, or an actual house where somebody can come home and kick their legs up after work and be able to cook a hot meal. So those typically run anywhere from, like I said, a few weeks to a few months, sometimes 6 months, sometimes 8 months. So they don't necessarily fall under the category of long-term rents, but they also garner a lot more income for each occupant than a long-term lease would. And then, of course, something that has been on the ear for so many people for so damn long, and that's your Airbnbs, VRBOs, etc. Basically nightly rents or sometimes weekly rentals where families coming on vacation or somebody's on business and they want an alternative to a hotel stay. And those actually too can be researched. And that's where actually most people have no clue how to go about or make a lot of mistakes. So there is actually a site called AirDNA. So www.airdna.com. And AirDNA will break down all of the operating expenses and your potential profits and cash flow on an Airbnb. So step one, let's sum it up. Do your research on the rental market, but also do the research on the demand in your rental market. Researching the prices by themselves is not enough. If there is a greater supply than demand of rentals, maybe it's not a great time to buy a rental where you're at. Same applies to Airbnbs. There are parts of the country where Airbnbs got so oversaturated that a lot of them are sitting vacant and people are losing money on them. So research, both the rental rates, cash flow, and the demand for that type of housing need where you're at or where you're considering buying. Step number two, work on your down payment. While this program does not require your income to be verified or you to have income per se, it does require a decent chunk of a down payment. We're talking 20 to 25% most of the time. Credit score dependent, this is not a blanket statement, disclosure, disclaimer, blah, blah, blah. But you do need to have that money in your possession, meaning in your accounts or with you having access to the accounts the money is coming from, documented for at least 2 months. So do your homework, gather up your funds, or at least source the money. Make sure that you have enough for 6 months reserve for the payments on the property that you're looking at buying potentially. And we're on to step number three. Step number three, this is where it gets really fun. Come talk to me. I'll write you a pre-approval letter. We'll talk about the types of properties you're interested in. We'll talk about the type of a down payment that the particular property requires. And by the way, Airbnbs, if you're going to actually buy an Airbnb outright, Airbnbs do require a slightly higher down payment than long-term rents. So with that in mind, come to me. We'll discuss your options. We'll write you a pre-approval letter. And more importantly, listen on. This is where it gets really, really, really important, and I can't stress it enough. We'll set you up with a real estate professional who actually knows rental real estate, because that can be a huge mistake, not using the right team of professionals on your side in order to buy your first or second or 22nd investment property. Comment below, ask me the questions, schedule a time to talk to me. We'll start planning your investment real estate venture together. Thank you for watching. I'll see you in the next one.